Freelancer Finance is back, and we're going to talk about stocks and not about infighting on YouTube. Is that something we can do today?
As long as the internet behaves itself.
Yeah, because we are the police of the internet,
Whenever there's an
of freelance.
injustice.
SoFi has been, actually, it's over 10 today. That's kind of amazing. I
Damn
was
it.
picking up, well, I mean, it's still low. Come on. This was at 774. I didn't actually pick it up at the bottom because there were other things I was buying, like
That
PayPal
is
and
a good
Square.
price.
We're not giving financial advice. This is just what we're doing. Just want to make that clear. SoFi trade right here, $9.34. I picked up 500 shares at market price. This is a sneak preview of what we're going to do. We're doing another video on how to retire on certain stocks. So for example, SoFi we're going to cover.
We'll be looking at different stocks and how many shares you need and what market cap or what target prices it would need within a reasonable amount of time for you to realistically retire, say in 5 or 10 years. And speaking of which, I am buying it right now. $1,000 and $7 some change.
That's 100 shares, right? Approximately right now.
And there we go. Confirm buy.
Clips are also, we're going to start populating clips. So in case you don't have time for an hour video or 2 hour video, you can just watch a 5-minute clip. And this is the first one up about Arcimoto and MLM. In portfolios, I'm showing my dividends, and I'll be actually going a lot into dividend investing because I am doing that and we never talk about it. And I feel I do want to talk about it, even for my own sort of sanity, to explain what's going on. This is grinding itself up very slowly. Like I started back in January 2020 and it was $2. Do you see the $2?
Yeah.
And all of a sudden now I'm up to like $1,200 just by consistently every couple of weeks, every month, just like putting money into it. All right, so SoFi, and Carlos just bought some shares. We just left off with Carlos buying some shares. It's $10.15 right now. So anyone who thinks that that SoFi can't go down or up, both can happen because we're in this sort of a volatile market for beaten down stocks. Not a value play, but it is a good growth play for the next 5 years. You know?
Well, also that close to its 52-week low. And I think the general sentiment is that we've seen the bottom. It was the day before the Fed meeting. It's not like it's going to fall very far. It's a good time to buy in.
Right now, the student loan thing that's happening with the government, May 1st, there's a student loan moratorium basically that lenders like SoFi will not be able to collect the money that they're due from the student loan borrowers if it's pushed back on May. And most likely, let's face it, that it will be pushed back because the government has no incentive to let bankers collect money right now when there's like in November there's elections happening. So the Democrats do not want to start screwing their public over and making them have to pay big loans at this point post COVID-19, and SoFi might be a little bit screwed in the interim. So I'm thinking a year of SoFi stock at, let's say between $7 and $15 in that range is very probable.
Chatter in DC is that the government will extend the freeze on student loan payments beyond May 1st. Our next guest writes in a new blog post, the administration continues to waffle on this issue, and $10,000 in debt should be wiped clean for student borrowers. SoFi CEO Anthony Noto joins us now. Anthony, always great to get some time with you. Before we even get into your blog post, based on your conversations with folks down in Washington, how likely is it that we get another freeze here?
It continues to waffle back and forth. An announcement was supposed to be made a couple of weeks ago, according to the chief of staff of President Biden. That date came and went, and we still haven't heard. This is classic leadership by indecision, and it's exactly not what the country needs. The American people deserve better. We need decisive leadership. We need the administration to take a stand. Kicking the can down the road is not currently going to suit all the needs of the American people. There really needs to be a three-pronged approach, and that needs to be announced before May 1. Number one is there are people that are in distress and that would default on their loans if payments were to begin again. Those people should be given some type of relief. Otherwise, they're going to default and have to go into bankruptcy. There's a second group of people that have an ability to pay, but they have a lower ability to pay.
Even going into bankruptcy, student loan debt is not forgiven.
Well, the student loan is not forgiven, but if
it
the
says
government...
you may have your federal student loan discharged in bankruptcy only if you file separate action known as adversary proceeding, requesting the bankruptcy court to find that repayment would impose undue hardship on you and your dependents. Okay, that's some new verbiage that I had never heard before.
If the moratorium continues, there is no bankruptcy, there's no loan payments. So these guys that cannot pay it, that's what he's talking about, are still in limbo. And if eventually they have to pay it, they're still going to go declare bankruptcy if they eventually have to pay it.
What he's saying is that if they can't pay as of like May 2nd, to then tailor the specific payment plan or whatever to those people, because otherwise they would go default. But that's the first that I'm hearing that At least the way he made it sound like you could get out of student loan debt with bankruptcy. Obviously, they wouldn't want that. That's not in his best interest. But I didn't even know that it was possible.
There's a second group of people that have an ability to pay, but they have a lower ability to pay today than they did 2 years ago when this student loan moratorium started. And we've spent $150 billion, that's what it'd be, since March of 2020. And this isn't March of 2020 any longer, but some people have gone 2 years without paying their bills, and they're currently in a situation where they can't pay as much. And there needs to be put in place programs for them. And those programs already exist. They just need to be executed and communicated. And then last, there are people that are fully capable of paying the student loans, and they should begin repayment on May 1st. So it's very clear the three needs of the American people. What's not clear is what the administration is going to do to help the American people versus spending another $5 billion a month to fund unnecessarily the moratorium on federal student loan payments.
The three different people Anthony Noto talked about is one, the people who are actually in distress and will not be able to pay. So as soon as they exit this moratorium,
they're going to default, yeah.
They're going to default, go into bankruptcy, and possibly that debt might not be wiped out. They might have to live with that debt forever. Number two, the people who are still a bit in distress after 2 years. So we do have to help both of these groups out. Even though they were able to pay, now they might still have a problem. Is that what he was getting at?
People that had financial hardship and now say are working, but can't pay as much.
And the third group of people, which absolutely can pay, are still not paying. And we're talking about like lawyers and doctors, whoever has student loan debt is in moratorium. As long as you called up and said to Anthony Noto and Sofi 2 years ago, hey, I can't pay, you're now in a position where you don't have to pay, and you can be a doctor, a lawyer, whoever else. So he's talking about that third group, really, that whoever can pay should be paying. What do you think of all of this? I know student loan debt is a big topic right now with liberals.
I think it just goes to show again that the study of the markets is inherently a study of politics, right? And like you said, would this be happening if this wasn't an election year? As an investor in SoFi, I appreciate what he's saying because he's trying to get value for the company. But on the flip side of that, as someone that's paid tens and tens of thousands of dollars in student loans, the reason why the people can't pay, the catalyst was not brought on by them. And so if they're still struggling with that, like, we give companies a pass for supply chain issues. They can't produce things. They're not able to produce profits. I mean, it's a bit of a supply chain issue for a person if their supply of money is not coming in the way that it used to be.
He is saying, let's get the people who actually need help, the extension or whatever they need. He is saying that. He's just saying there's certain people at the end. We didn't finish the point maybe longer, but there's people who can pay. There's people in a good position post-pandemic, like doctors, lawyers, or whoever has a software engineer, whoever had a loan, basically a student loan, can technically pay it, but doesn't have to. So if all student loans are forgived, is that fair? As investors too, and as people who did pay those loans when we were younger, we had those loans and we had to pay them and we went through it. Why should they just get off scot-free?
The current student loan debt in America is about 1.6 trillion in federal and private student loan debt as of March 31st, 2021. The average student loan debt, bachelor's degree, 28 grand, graduate school, 71,000, et cetera, et cetera. Law school, look at these guys. They're coming out of school with 145,000 in debt. Dental school, 292,000. It's a lot of money. But at the same time, the Biden administration is requesting $773 billion for the Pentagon, a 4% boost. So you can argue that the money is there to forgive the student loan debt.
Shouldn't this be on the school then, like as opposed to on SoFi, which just gave the loan to go to that school? Does that make sense what I'm saying? Like the school is the one that's artificially keeps raising these rates on going to school beyond inflation. So isn't that the school doing that? So shouldn't they be a part of the solution and not just SoFi and banks like them?
The money that these kids took out to go pay for their loans, they're going to be they're the next generation that's going to create the value and continue the growth story of America. And so right now, the way that it seems to be framed is that it's just giving things away for free, but it's an investment. I see it as a massive, and what better thing to invest in seriously than people? SoFi took a risk by taking on those loans, but at the same time, the school needs to get paid. I mean, if we're just saying it the way it is, right? The kid comes to the school, that tuition needs to be paid. If you don't have the money, someone needs to pay them because they actually have operating costs.
Right. So they're making money on the loan, and then the loan moratorium comes in, not making any money on the loans anymore. It's just debt, basically, even though they're claiming it. We'll take a look at their numbers a little bit, that they're showing it still as sort of income, that it's revenue. So I feel like SoFi and banks like it are being picked on. You guys hold the bag while we figure this out because the government doesn't have to pay it. Student doesn't have to pay it. The debt collector does. And we all hate debt collectors. That's the thing. It's so easy to give them the debt. It's like obvious.
But it's a little different when you're invested in the company. That's what I'm saying. Your investments, no matter how hard you try to be neutral, it will force you to face your own moralities.
What happens when the next set of kids go to school and wants to take loans out. All of a sudden, they're 2% rates, and now if a bank doesn't feel secure that they'll ever get the money back, the rates themselves might either skyrocket or there'll just be less people going to those schools because they can't get the loans.
It's kind of predatory lending. I mean, I was 18 years old when I signed these papers. And when you combine the fact that there's really no solid financial education in schools, I had no idea what I was signing.
I'm curious why you decided to speak out on this particular issue. You seem to be pretty impassioned about it. And in the blog post in which you lay out your argument as well, what sort of triggered your desire to talk about this?
Yeah, first, full disclosure, SoFi is in the business of student loans, so we get impacted by this indecision, but that's not the motivation. SoFi is going to be fine either way. We had record revenue in the third quarter. We had record revenue again in the fourth quarter. We achieved over $1 billion of revenue in all of 2021 and our first full year of profitability on an EBITDA basis, all while the federal student loan program has been on hold.
They're not a profitable company, but he's saying we're still growing and still making money even without this loan business, but they still have a lot of loans on the books.
Someone needs to lead from the front. Someone needs to be a voice of reason to the administration and help them understand the pain and suffering that they're causing by their indecision. The American people deserve to know how to plan for the future. And it's not just the current people with student loans, but it's all those young people that are graduating from high school this year, that are making college decisions right now. How are they going to fund their college education? What are the rules? What are the programs? And so the indecision is causing people not to be able to make vital financial decisions in their lives. And we see it every day. Rates are at still an all-time low, but they're expected to increase 7 to 8 times over the next 2 years. As those rates go up, student loan borrowers will lose the opportunity to refinance at lower rates through companies like SoFi and save tens of thousands of dollars. Additionally, those people that have been saving for the last 2 years, the money that they haven't had to spend on paying back their student loans, they need to know if they can continue to spend or they need to change their budget and start to allocate that to their payments. And so this indecision is causing strife across many different constituencies and the business community.
I mean, it's obvious he makes money on this. As an investor, I appreciate that he's trying to get the return and try to show the profits. But to frame it the way that he's framing it, that the American people are asking for this or that students are asking for this, I just don't buy it.
He's injecting himself in this conversation for an audience of one. The top leadership in the Democratic Party, he's saying, we need to solve this. This is an issue for companies.
Carlos, the investor, this is only good news. I just bought some SoFi today. If this keeps the stock price low for another year, I'm not getting out of the stock anytime soon. So if this keeps the stock price low, it's all fine for me. It just allows me to continue to DCA. And eventually this is going to get figured out. But let's be honest, no one at the administration is looking to him for an opinion on what to do.
He's talking to rich people. Let's be honest with ourselves. This is not directed towards student loan payers.
This is for him to speak to investors to say, this is what we're doing to try to show this revenue on our books.
There's a letter he wrote to the president, to President Biden, but it's the same thing we just saw in the video. He goes into the reasons why we should do this. Let's look at their actual financials and how much the student loans are to affect them and how they're growing, because the point is that we're still investing in SoFi. At the end of the day, even with this problem,
November 8th, they'll figure it out. No problem.
Exactly. And SoFi's not going bankrupt yet. Members are increasing. This is Q4. 87% it increased. And if you look at, they're growing, 80+% every single quarter. So this is pretty good numbers. Product growth, it's 105% in terms of product growth. I'm going to stop at a couple of good ones, but here, Galileo is what actually is my belief in SoFi, that they're doing the
back end, yeah.
This is really why I'm investing in SoFi. I know they have the student loan business. I know it's important, but I think if this succeeds, this is really where we become pretty well off with SoFi stock from this. And It's growing. Look, 67% last quarter, but you can see before that, 81%, 119%. This Galileo product is growing pretty fast.
When I got my first bank account, it was with Republic Bank. It eventually became HSBC, but I stayed with that bank for 10 years. So if they get these kids young, they're going to stay with them for life. And when they want to buy a home, they're going to use SoFi. Targeting these kids young is a super smart move. A lot of this stuff's really not going to pay dividends until 5-10 years from now. This is a really smart move, and it takes a long time for this to play itself out. So again, with a super long term horizon, whatever happens in the interim with SoFi, it's irrelevant to me as an investor.
I feel like people are totally discounting how big this business can become. One-stop shop. Everybody can come who needs a back end for their financial business. They can go to them. I like that. This is SoFi in 2021, that adjusted net revenue. So you can see they're growing their net revenue. This is their annual adjusted EBITDA, which is growing, and he said it's positive. So this is the one point I do want to make, that they are not a profitable company because EBITDA is earnings before interest, taxes, deduction, appreciation.
Yeah.
It removes a bunch of stuff, basically, and it says, okay, we actually are profitable with this figure, this EBITDA thing. Let's see what Warren Buffett, what he has to say about EBITDA. And he says, we won't buy into companies where someone's talking about EBITDA. If you look at all companies and split them into companies that use EBITDA as a metric and those that don't, I suspect you'll find a lot more fraud in the former group. He's saying use EBITDA because it removes a bunch of the expenses they have, which is sort of like, well, you got to include the expenses, right?
Yeah.
At the end of the day, you want to be a net revenue positive. They're already expecting that we will not have the student loan, the federal student loan program will be postponed. So they're writing Q1 22 guidance incorporates the negative impact of the unexpected extension of the federal student loan payments moratorium to May 2022. So they don't even have it past that. If it goes past that, then their Q2 guidance will also reflect that as well. 30% growth, implied year-over-year growth. On the low end, 30%. On the higher end, 32%. If we go to guidance for the full year, they're actually saying they're going to be annual growth of 55% still with these problems, unless they're assuming in this that they can start charging for the student loans. I'm not sure about that.
We throw our money at Tesla when they're growing, say he's growing 50%. That's great growth.
If you're DCAing and you're waiting for better prices, once again, I say, like, what are you waiting for? It's already like at almost 52-week lows. I don't know.
Say, yeah, look at the 52-week low. What we're seeing now is a bit of a breakout. Obviously, this was a massive downtrend, and we're really just sort of breaking out. There's no reason why this might not continue to go back down. We'll see if this pump is real, if this was really the bottom. But still, at $10, it's still a really good deal. I mean, look at the last. It's still, when it IPO'd higher.
If you just follow sound advice of dollar cost averaging, that's all you need.
Joseph Carlson, we'll put a link in the corner.
I feel like there's also a downtrend in play that touched 1, 2, maybe not this top point, but it did sort of hit here. So I'm considering this is a possibility that we are still in this downtrend here.
Look how nice it's hugging this line here. Yes, it popped through, but as soon as it popped through, you got massive sell-off. And then here you got massive sell-off. I mean, this was a pump, but look at the sell-off.
Yeah. And so if it doesn't hold $11, guess where we're going?
Oh, we're going south. 200 days on top. We have the 100-day, then we have the 50. And then
they're all in the wrong order. They're all in the wrong order here.
It's completely inverted.
Basically, the 50-day, we're not even there yet. It's possible we go up to 11, and then we see what happens if there's enough momentum. But I think with this moratorium being extended, I really don't feel that confident that SoFi is going to be pushing to like $15. I don't feel confident about that at all, which is fine. We get to buy more, just as you said, right, as it goes down.
I didn't see it on my chart. I didn't see the RSI. It's pretty low. And look at it.
It's in the middle. It's like at 50.
Hasn't been able to break 50. But I mean, just typically going back, what is that? That's going back to November 2021?
Here, if you're right, here is the resistance for the RSI, and back to December of 2021 when the market collapsed, basically, October, November. Yep, so we'll see right now. This is a moment in time where we'll see if it can break through and go a little bit higher.
If we had to predict, or if I had to predict, based on that history and the news that we're getting, this thing will take a downturn from here. I mean, the RSI is at its peak. It looks like it's trading in that little channel, won't go above 50. And we'll see it fall back down. We'll get a couple of red candles. But again, it doesn't matter. I mean, you're buying this lower than the price it IPO'd.
If we touch $7 again, maybe that'll be the bottom, unless the news is so horrific for SoFi with the moratorium. Who knows what'll happen, honestly.
Right, in May. Right.
It could be way worse. We don't know. Like it could totally break down here. But if it holds the $7.80 that we see, then that's actually a good sign. And hopefully we can break out later. If not, oh well, you buy it for $6, you buy it for $5. That's what'll happen. So anyone thinks it's going to like $100, I'm just trying to eliminate that. That's not happening. I think we're in a good position to accumulate. That's what I think.
I agree. And looking at that, how with like the $24 is that resistance. If it does ever get back there, I feel like it would pop through this time. Sort of like 2 or 3 times it tests it. Anyone that wanted to sell out would have gotten out. And so it still has a long way to run. This is a 2.5x back to its all-time high. And actually, if you really look at the chart and get in there on the daily, this thing actually peaked at $28.
Almost 30, yeah.
Almost $30. So from here, just the potential upside from here is 180%. 180% back to its all-time high. And so we're buying this on the right side. It's obviously in a massive downturn. The pendulum has swung. It's all negative. It's a good time to buy, and the potential upside just to the all-time high is at 2.5x.
Only $1 a month to join our Patreon and to some private stuff in the Discord. And early content and stuff. 420 if you do like what we're doing, and we have extra bonus stuff for you guys. So we're going to do an exclusive videos. We're doing a dividend thing. So a lot is happening with the Patreon, and we're building up to it. We're still a smaller channel, so any help you guys can give us, we appreciate it. Okay, institutional ownership was actually higher when I posted this. It was 51%. So the one thing I want to show that institutional ownership has fallen a bit, and now it's at 50%. Anthony Noto himself has been buying a lot of shares. I think he spent, this is Joe, he posted this, 750,000 total. He bought a bunch of buys, 20,000 shares it looks like, and different prices, all the way from $10 all the way down.
No, he's buying the dip. When I dip, you dip, we dip.
I think we're in a moment in SoFi where there's no rush, but it's a good price to DCA.
One last thing that I would add to that is this company is 23% shorted.
That's a lot.
I don't even really have a top price target for what this thing is. I just feel like if this is one of the companies that's going to be around in 10 years, they're not going to be where they are now. It's going to be a great position you'll be happy that you have it. And speaking of which, soon we will be doing a series of videos that will cover how to retire on stock blank, in which we will go through the actual numbers and calculating based on a certain time frame, target prices, share counts, what you would need to be able to retire by holding this company. And when we say retire, we're saying somewhere between a $1 and $2 million return on the capital. So stay tuned, hit like, hit subscribe so you get notified when that video comes out. And the first video that we're going to be doing in that series is SoFi, so stay tuned.